Right now, as you're watching this video, there's a crisis brewing that most people have no idea about. It's happening in an industry that touches every single aspect of your daily life, and it's creating a silver shortage so severe that it could reshape the entire precious metals market forever. I'm talking about the electronics industry, and what's happening behind the scenes is absolutely staggering. While everyone's been focused on gold, silver has quietly become the most critical metal on the planet, and we're running out of it faster than anyone imagined. The Silver Institute just released their World Silver Survey for 2025, and the numbers are shocking. Industrial demand now accounts for 59% of all silver usage globally. That's not jewelry. That's not investment demand. That's actual consumption, where the silver disappears forever into products we use every day. Let me paint you a picture of what's really going on. Every smartphone in your pocket contains about half a gram of silver. Your laptop, another 2 grams. Your car's electronic systems, we're talking about 15 to 28 grams of silver, depending on the model. And if you drive an electric vehicle, that number jumps to over 55 grams per car. But here's where it gets absolutely mind-blowing. The transition to 5G technology alone is creating a silver demand surge that nobody saw coming. A 5G-enabled smartphone requires 34% more silver than a 4G phone. With over 1.4 billion smartphones sold globally each year, and the push toward 5G adoption accelerating, we're looking at an additional 400 tons of silver demand annually, just from this technology upgrade. Now here's the kicker, and this is what the mainstream media isn't telling you. Silver consumption in electronics has increased by 240% over the past decade, while silver mining production has only increased by 12%. You don't need to be a mathematician to see where this is heading. I recently spoke with a supply chain executive at one of the world's largest electronics manufacturers, and what he told me was shocking. He said they're now paying premiums of 15 to 20% above spot price just to secure silver supplies for the next 6 months. 6 months. These are companies that used to plan their silver purchases 2 years in advance. The reason this matters so much is because silver isn't just another component in electronics. It's irreplaceable. Silver has the highest electrical conductivity of any metal on Earth. It's 6% more conductive than copper and doesn't corrode like other metals do. When you're dealing with the microscopic circuits in modern electronics, there simply is no substitute that performs as well. Think about this for a moment. Every time you touch your smartphone screen, you're relying on silver's unique properties. Those tiny circuits that make your phone respond to your touch, they're made with silver ink. The 5G networks that are being rolled out across the globe, they require significantly more silver per device than 4G technology did. But smartphones are just the tip of the iceberg. The real silver consumption monster is the automotive industry's transformation. Traditional gasoline cars use about 15 grams of silver in their electronic systems. Hybrid vehicles bump that up to 25 grams. But electric vehicles? They're silver-hungry beasts, consuming 55 to 85 grams per vehicle, depending on the model and features. Tesla alone, with their projected production of 2 million vehicles annually, will consume approximately 110 tons of silver per year. That's just one company. When you factor in all the other automakers racing to electrify their fleets, GM, Ford, Volkswagen, BMW, Mercedes, we're looking at a massive surge in silver demand that's happening right now. The International Energy Agency projects that there will be 145 million electric vehicles on the road by 2030. If we assume an average of 60 grams of silver per vehicle, that's 8,700 tons of silver locked away in car electronics. And unlike jewelry or coins, this silver isn't coming back to the market. Once it's in a car's electronic system, it's gone for the life of that vehicle. Here's where the story gets even more compelling. I've been tracking the inventory levels at the major silver exchanges, and what I'm seeing is unprecedented. The COMEX silver inventory has dropped by 35% over the past 18 months. The London Bullion Market Association is reporting similar drawdowns. Meanwhile, industrial demand continues to surge. Silver prices just broke the $47 mark for the first time, rising 1.53% in a single day amid these supply constraints. But here's what most analysts are missing. This isn't just a temporary spike. This is the beginning of a structural shift in the silver market that could persist for years. A contact of mine who works in precious metals procurement for a major electronics manufacturer told me something that should concern every investor. He said his company has started stockpiling silver, not for production needs 6 months out, but for production needs 2 years out. They're essentially hoarding silver because they're terrified of supply disruptions. This isn't just happening in electronics. The solar panel industry is another massive silver consumer that's flying under the radar. Each solar panel contains about 20 grams of silver, and with global solar installations expected to triple over the next decade, we're looking at another 3,000 tons of annual silver demand from this sector alone. The weakness in Japanese industrial demand in 2024 was actually due to fierce competition from Chinese fabricators in the photovoltaic powder market. Chinese companies are dominating solar panel production and consuming massive amounts of silver in the process. China now accounts for over 70% of global solar panel manufacturing, and they're consuming an estimated 2,800 tons of silver annually, just for solar applications. But here's what makes this situation truly explosive. The supply side of the equation is falling apart. Silver mining is incredibly challenging because silver is rarely found in pure deposits. About 70% of silver production comes as a byproduct of mining other metals like copper, lead, and zinc. When those base metal prices are low, many mines become unprofitable, and silver production drops as a collateral consequence. Right now, we're seeing exactly this scenario play out. Copper prices have been volatile, lead mining has faced environmental restrictions, and zinc demand has been inconsistent. The result? Silver production from these byproduct sources has declined by 8% over the past 2 years, just as industrial demand has exploded. I want to share a story that perfectly illustrates how serious this shortage is becoming. Last month, a major electronics manufacturer in South Korea had to halt production for 3 days because they couldn't secure enough silver for their circuit boards. 3 days of lost production cost them an estimated $50 million. This wasn't due to a labor strike or equipment failure. It was purely a silver supply issue. The company's procurement team had been trying to source silver for weeks, but every supplier they contacted was either sold out or demanding prices 25% above the spot market. Eventually, they had to pay a 30% premium to a dealer in London just to get their production line running again. This is happening more frequently than you might think. I've documented at least 12 instances over the past 6 months where electronics manufacturers have faced production delays specifically due to silver shortages. These aren't small companies. We're talking about household names that produce millions of devices annually. The implications of this shortage extend far beyond just higher silver prices. When electronics manufacturers can't get the silver they need, they have 3 options: pay massive premiums, delay production, or redesign their products to use less silver. All 3 options ultimately get passed on to consumers in the form of higher prices or inferior products. Apple, for instance, has reportedly invested over $200 million in silver supply chain security over the past 2 years. They've signed long-term contracts with mining companies and even provided financing for silver exploration projects. When a company like Apple is willing to invest that kind of money to secure silver supplies, you know the shortage is real. Now, let me tell you about something that's happening right now that could change everything. Central banks around the world are starting to wake up to silver's strategic importance. The Chinese government has classified silver as a critical mineral and has imposed export restrictions on silver compounds used in electronics manufacturing. Russia has done something similar, limiting silver exports to unfriendly nations. When you combine this with the fact that Mexico, the world's largest silver producer, has been dealing with mining strikes and environmental protests that have reduced output by 12%, you start to see how precarious the global silver supply really is. But here's the part that should really get your attention. Unlike gold, which is primarily held as a store of value and can be recycled relatively easily, silver used in electronics is consumed. It's gone forever. The tiny amounts of silver in each device make recycling economically unfeasible. When your smartphone breaks or becomes obsolete, that half gram of silver essentially disappears from the available supply. This creates what economists call a consumption sink. Silver going into electronics never comes back to the market. And with electronics consumption growing exponentially, this sink is getting deeper every year. The recycling rate for silver from electronics is less than 15%. Compare that to gold, which has a recycling rate of over 90%. The reason is simple. The amounts of silver in each device are so small that it's not economically viable to recover them. Your smartphone might contain 50 cents worth of silver, but it would cost $15 to extract it. I've been analyzing the silver market for over 15 years, and I've never seen a supply-demand imbalance this severe. The latest data shows that industrial demand for silver exceeded mine production by 237 million ounces in 2023. That deficit was filled by recycling and existing stockpiles, but those sources are finite. Here's something that might be relevant if you're sitting on $100,000 or more in retirement accounts. I've put together a comprehensive guide on how gold IRAs work, including how to get physical precious metals into your retirement account without tax penalties. It's linked in the description below and covers strategies that could be particularly relevant given what's happening in the precious metals market right now. Back to the crisis at hand. The electronics industry's silver shortage is creating ripple effects throughout the entire precious metals market. Silver's price has historically tracked gold at a ratio of about 70 to 1, meaning it takes 70 ounces of silver to buy 1 ounce of gold. Right now, that ratio is sitting at around 85 to 1, suggesting silver is significantly undervalued relative to gold. But here's what's really interesting. Industrial users are starting to bid against investors for available silver supplies. Traditionally, the silver market has been dominated by investment demand and jewelry manufacturing. Industrial users were price takers who simply paid whatever the market demanded. That dynamic is changing rapidly. Electronics manufacturers are now competing directly with precious metals investors for physical silver, and they have much deeper pockets. When Samsung needs silver for their latest smartphone production run, they're not going to let a few dollars per ounce stop them from securing supplies. This competition is creating a floor under silver prices that didn't exist before. Even if investment demand for silver were to decline, industrial demand would likely keep prices elevated. It's a fundamental shift in market dynamics that most analysts are completely missing. The situation becomes even more compelling when you consider the geopolitical implications. Silver mining is concentrated in just a few countries. Mexico, Peru, China, Chile, and Russia account for over 60% of global production. Any political instability or trade disputes involving these nations could severely disrupt silver supplies. We're already seeing this play out with Russia. Since the Ukraine conflict began, Russian silver exports to Western countries have dropped by over 80%. That's approximately 1,200 tons of silver annually that's no longer available to electronics manufacturers in Europe and North America. China's position is particularly interesting. They're simultaneously the world's largest silver consumer and the third largest producer. Chinese electronics manufacturers are consuming more silver than the country produces, making China a net importer, despite their significant mining operations. This puts Chinese manufacturers in direct competition with Western companies for silver supplies from Mexico, Peru, and other producing nations. And given China's strategic focus on dominating the electronics and renewable energy sectors, they're likely to secure silver supplies at any price necessary. The solar panel industry adds another layer of complexity to this shortage. As governments around the world push for renewable energy adoption, solar panel demand is exploding. The U.S. Inflation Reduction Act alone is expected to drive a 40% increase in domestic solar installations over the next 5 years. Europe's Green Deal has similar ambitious targets. Each of these solar panels requires silver for its photovoltaic cells, and there's currently no viable substitute. Researchers have been trying to develop silver-free solar cells for years, but they're still 15 to 20% less efficient than silver-based designs. In an industry where efficiency is everything, that performance gap is unacceptable. I recently attended a renewable energy conference where a solar panel manufacturer's CEO made a startling admission. He said his company is considering vertical integration into silver mining because they're so concerned about future supply security. When manufacturers are talking about buying mines to secure raw materials, you know the shortage is severe. The automotive industry's transformation is happening even faster than most people realize. General Motors has committed to producing only electric vehicles by 2035. Volvo has set a target of 2030. Even luxury brands like Bentley and Jaguar are going fully electric within the next decade. Each of these electric vehicles requires significantly more silver than traditional cars. The electric motors, battery management systems, charging infrastructure, and advanced driver assistance systems all rely heavily on silver's superior conductivity. Tesla's Cybertruck, for example, contains an estimated 95 grams of silver per vehicle. With Tesla planning to produce 250,000 Cybertrucks annually once production ramps up, that's nearly 24 tons of silver per year for just one vehicle model from one company. Multiply that across the entire automotive industry's electrification plans, and we're looking at a silver demand surge that could easily exceed 5,000 tons annually by 2030. That's equivalent to about 15% of current global silver mine production being consumed by just the automotive sector. The infrastructure required to support this electric vehicle revolution creates additional silver demand that most analysts are overlooking. Every charging station contains silver-based components. The smart grid technology needed to manage increased electricity demand relies on silver-enhanced electronics. 5G networks, which are essential for the connected car features that consumers now expect, require significantly more silver per base station than previous generation networks. The rollout of 5G infrastructure globally represents another 800 to 1,000 tons of annual silver demand that's just beginning to ramp up. Artificial intelligence is creating another massive silver demand driver that most people haven't considered. The data centers required to power AI applications consume enormous amounts of electricity and require sophisticated cooling and power management systems. These systems rely heavily on silver-based components for optimal efficiency. NVIDIA's latest AI chips, for example, contain significantly more silver than traditional computer processors. As AI adoption accelerates across industries, the demand for these high-performance chips is exploding. NVIDIA alone is projecting chip sales that could consume over 200 tons of silver annually by 2026. The Internet of Things represents another massive silver demand driver that's just getting started. Smart home devices, industrial sensors, autonomous vehicle systems, and connected infrastructure all require silver-based electronics. Cisco estimates that there will be over 75 billion connected devices by 2030. If each device contains just 0.1 grams of silver on average, that's 7,500 tons of silver locked away in IoT applications. And many of these devices contain significantly more silver than that minimal estimate. The defense industry adds another layer of strategic demand that's often overlooked. Modern military equipment is essentially a collection of sophisticated electronic systems, all of which rely on silver's superior conductivity and reliability. The U.S. Department of Defense has classified silver as a critical material for national security purposes. They maintain strategic stockpiles, but those reserves are primarily intended for military applications, not commercial markets. As geopolitical tensions rise and defense spending increases globally, military demand for silver is growing. This creates another source of price-insensitive demand that competes with commercial users for available supplies. Space exploration and satellite technology represent emerging silver demand sources that could become significant over the next decade. SpaceX alone is launching thousands of satellites for their Starlink network, each containing silver-based components. The commercial space industry is projected to grow from $400 billion today to over $1 trillion by 2030. Satellites, space stations, lunar bases, and Mars exploration missions all require electronics that can function reliably in the harsh environment of space. Silver's unique properties make it irreplaceable for many of these applications. What makes this silver shortage story so compelling is that it's happening across multiple industries simultaneously. It's not just electronics, or just automotive, or just solar panels. It's all of them at once, creating a perfect storm of demand that's overwhelming available supplies. The medical device industry is another significant silver consumer that's growing rapidly. Silver's antimicrobial properties make it essential for many medical applications, from surgical instruments to implantable devices. As global healthcare spending increases and populations age, medical silver demand is growing by 8 to 10% annually. The convergence of all these demand drivers is creating a silver shortage that's unlike anything we've seen before. It's not a temporary supply disruption that can be resolved by opening new mines or increasing production at existing facilities. It's a structural shift in how silver is consumed that could persist for decades. Mining companies are struggling to respond to this demand surge. Silver exploration has been underfunded for years because prices were relatively low and stable. It takes 7 to 10 years to bring a new silver mine online, which means any supply response to current shortages won't materialize until the early 2030s at the earliest. Even then, Most new silver production will come as a byproduct of other metals mining. Pure silver mines are rare and expensive to operate. This means that silver supply will continue to be constrained by the economics of copper, lead, and zinc mining, rather than silver demand fundamentals. The investment implications of this shortage are staggering. If industrial demand continues growing at its current pace while mine production remains flat, we could see silver shortages that make the current situation look mild by comparison. I've been modeling different scenarios, and even conservative projections show industrial silver demand exceeding total global production by 2027. That's just 2 years away. The only way to balance the market would be through dramatically higher prices that either stimulate new production or reduce demand. But here's the problem. Silver demand from electronics is relatively price inelastic. When Apple is designing the next iPhone, they're not going to compromise on performance to save a few cents worth of silver per device. The silver cost is insignificant compared to the overall product value and the performance benefits it provides. This means that silver prices could rise substantially without significantly reducing industrial demand. Electronics manufacturers will simply pass the higher costs on to consumers, who are unlikely to notice an extra dollar or two in the price of a $1,000 smartphone. Smart money is already positioning for this shift. I've been tracking institutional silver purchases, and the pattern is clear. Hedge funds, pension funds, and sovereign wealth funds are accumulating physical silver at levels I haven't seen since the 2008 financial crisis. The difference this time is that they're not buying silver as an inflation hedge or dollar alternative. They're buying it as a supply shortage play. They understand that the electronics industry's insatiable appetite for silver is creating a structural deficit that could persist for years. Some of the most sophisticated investors in the world are making massive bets on silver. Stanley Druckenmiller, one of the most successful hedge fund managers in history, has been accumulating silver positions. Ray Dalio's Bridgewater Associates has increased their precious metals allocation with a significant focus on silver. These aren't momentum traders looking for quick profits. These are long-term strategic investors who understand that the silver market is undergoing a fundamental transformation that could take years to fully play out. The timing of this shortage couldn't be more significant. We're at the beginning of what could be the largest technology upgrade cycle in human history. The transition to 5G, the electrification of transportation, the build-out of renewable energy infrastructure, and the expansion of artificial intelligence computing. All of these trends are massively silver-intensive. The investment opportunity this creates is unprecedented. Silver prices have historically been volatile, but the current shortage is creating a fundamental shift in market dynamics that could support much higher prices for an extended period. Unlike previous silver price spikes that were driven primarily by investment speculation, this shortage is rooted in real industrial demand that's not going away. Electronics manufacturers need silver to function, and there's no viable substitute for most applications. This creates what I call a demand floor under silver prices. Even if investment demand were to decline, industrial demand would likely prevent significant price drops. And as shortages intensify, industrial users may be forced to bid prices higher to secure necessary supplies. The magnitude of this opportunity becomes clear when you consider the scale of the industries involved. The global electronics market is worth over $5 trillion annually. The automotive industry is worth $3 trillion. Solar energy is approaching $200 billion. These are massive industries that depend on silver, and they have the financial resources to pay whatever prices are necessary to secure supplies. For investors who understand what's happening, this silver shortage represents one of the most compelling investment opportunities of our lifetime. It's a structural shift in supply and demand fundamentals that could drive silver prices significantly higher over the coming years. The key is to position before the broader investment community recognizes the severity of this shortage. Once mainstream investors understand that silver is becoming a critical industrial commodity with limited supplies, demand for silver investments could explode. Physical silver, silver mining stocks, silver streaming companies, and silver ETFs could all benefit from this trend, but the opportunity won't last forever. As prices rise and shortages become more apparent, the easy gains will be captured by early investors who recognized the trend before it became obvious to everyone else. The hidden silver shortage in the electronics industry isn't just changing the precious metals market. It's reshaping the entire global economy. Silver has quietly become one of the most critical materials on Earth, and we're running out of it faster than anyone imagined. The companies, investors, and countries that secure silver supplies now will have a massive advantage in the technology-driven economy of the future. Those who ignore this trend do so at their own peril. The silver shortage is real. It's happening now, and it's going to change everything. The question isn't whether silver prices will rise, it's how high they'll go and how quickly they'll get there. For those who position correctly, this could be the investment opportunity of a lifetime.